All right, let's dive into Journey Medical's latest earnings report. Now, on the surface, the company dropped some really good news. But, the market's reaction? It was something else entirely. And it left a lot of people just scratching their heads. So we're going to dig in and figure out what on earth the market saw that maybe management didn't. And this number right here, this is really where the whole story starts. In just one single day of trading, right after their earnings call, Journey Medical stock absolutely cratered, dropping by over 15%. I mean, that is a brutal, brutal response from investors. To put some real dollars and cents on it, the stock went from $8.54 all the way down to $7.25. And get this, it happened on huge trading volume, almost 3 times the daily average. So this wasn't some quiet little sell-off. This was a flat-out stampede for the exits. And that right there brings us to the big mystery we need to solve today. Journey Medical actually beat Wall Street's revenue numbers, and management was, incredibly positive about their big new product launch. So why on earth did investors slam the sell button so hard? Let's break it down. First up, let's look at the story that management was so excited to tell. This is the bull case, the optimistic side, and it really all comes down to one product, their new oral treatment for rosacea, which is called EMROSI. So, total revenue for the quarter landed at $15.01 million, which, just squeaked by the analyst consensus. But the real story isn't that they beat, it's how they beat. Turns out, the entire beat was driven by $2.8 million in sales from the brand new EMROSI launch. And the early signs of demand for EMROSI were just incredibly strong. By the end of July, just a few months after it launched, over 12,800 prescriptions had already been filled. For a new drug, that is a seriously fast start right out of the gate. Now, look, getting a prescription is one thing, but getting insurance to actually pay for it, that's what really matters. And this is where Journey Medical scored a massive win. They expanded insurance coverage to 65% of commercial lives by July. That's a huge jump from just 30% only 2 months before. And that insurance access translated directly into doctors writing scripts. The number of unique prescribers just exploded to over 1,800. That's nearly triple the 660 they had last quarter. I mean, that's not just growth. That's a signal that doctors are getting really comfortable with this new treatment, and fast. The CEO, Claude Morali, he summed up all this momentum perfectly. He said that prescription numbers were hitting a new high not just every month, but almost every single week. So from where management was sitting, this launch was basically a flawless victory. Okay, so if the EMROSI launch was such a home run, we have to look at the other side of the ledger, right? Let's pivot to the bear case and see what had the market so spooked. And boom, here it is, the big, flashing red flag. While the revenue line looked pretty good, the profitability was just a complete disaster. The company lost 16 cents per share when Wall Street was only bracing for a 7-cent loss. I mean, this wasn't just a miss. This was a colossal miss by over 128%. This slide just illustrates the company's core problem so perfectly. You see, for every dollar of new growth they're getting from EMROSI, they're losing almost a full dollar from their old legacy product, Accutane, which is just getting crushed by generic competition. It's kind of like they're trying to fill a bucket that has a giant hole in the bottom. So let's put it all together. Here's why investors sold the news. You had that huge earnings miss. You had the foundation of their old business, Accutane, crumbling. There was a lot of uncertainty about how much money they're actually making per prescription because of coupons. And to top it all off, management refused to give any formal financial guidance for the future. So despite the market just hammering the stock, management laid out what they believe is a clear plan forward. Let's take a look at how they plan to navigate these headwinds and get this ship pointed back towards profitability. The key phrase management kept repeating over and over again was becoming EBITDA positive. Now, for anyone not familiar, this is just a way of measuring a company's core operational profitability. It basically asks the question, before you account for things like interest and taxes, is the basic business of just selling your product actually making money? And they were firm on their goal. Even with the big loss this quarter, the leadership team doubled down. They promised investors they would hit that crucial milestone of being operationally profitable before this year is over. That's the target they want everyone to focus on. And their plan to get there? It's actually pretty straightforward, and it is all about EMROSI.
It's about getting more doctors to prescribe it, driving up the total number of scripts, getting even better insurance coverage, and, this is the most important part, making sure those prescriptions actually turn into high-margin revenue as they move patients off of temporary coupons. Okay, so we've seen the good, the bad, and the ugly. We've heard the bull case and the bear case. So now it's time for our verdict. What should you be watching for, and where does the stock go from here? This table really sums up the whole conflict, doesn't it? On one hand, you have absolutely fantastic momentum with the EMROSI launch. But on the other hand, you have these really ugly financial results, driven by that big EPS miss and the Accutane decline. The market is just caught between this promising future and a really painful present. So, looking ahead to next quarter, the story really boils down to one simple thing. It's a race. Can the growth from EMROSI finally and decisively outpace the decay of Accutane? In Q2, they basically fought to a draw. In Q3, EMROSI has to start winning, and winning big, for the story to change. That is the single most important thing to watch. So based on all of this, our rating is market perform. Look, the potential for the EMROSI launch is absolutely real, and it's significant. But so are the risks. The company has a clear plan, which is good, but the stock is probably going to trade sideways until they can prove, with numbers, that their new growth engine is strong enough to lift the entire company. And that really leaves us with the ultimate question for Journey Medical, doesn't it? Management has bet the entire company on the success of EMROSI. We've seen the incredible start, but we've also seen the powerful headwinds they're flying into. So now, we just have to wait and see if this one big bet can truly pay off. And as always, please remember, this is not financial advice. Be sure to do your own research.